Hi, my name is George Gonzalez and I'm a realtor in Miami, Florida with Team Dad of 8, and we're part of Keller Williams Realty here in South Florida. Have you thought about how difficult it is for young people today to acquire their first home? You might be one of my peers, in your 50s and maybe 60s. I'm in my late 50s. And a lot of my friends and peers have children who are in their late 20s, 30s, early 40s, and they're buying their first home. And comes up a lot in conversation, how difficult it is for young people today to acquire their first home and, be part of that American dream of a home ownership. And the fact that interest rates keep going up, the prices of real estate keep going up, and it seems less and less affordable and obtainable for so many young people. So a lot of people worry about young people and whether they're ever going to be able to enter the home ownership world. Well, I want to share with you guys a strategy that I think is a solution to this problem. 2 out of my 8 children have already been able to implement this strategy, and I'm very proud of them. I've used it in the past myself. If you stay tuned to this video, I'm going to share what that strategy is and what the recent changes are that even make it more accessible. So stay tuned and watch this video. All right, I'm going to cut to the chase. What is this strategy? The strategy is, instead of buying a regular single-family home as your first home, buy a small multifamily property. Now, what is a small multifamily property, George? What I'm talking about are duplexes, triplexes, and fourplexes, right? Properties that were built, designed, zoned, and permitted to house 2 families, 3 families, or 4 families. Fun fact, up to a 4-unit building for mortgage purposes, that is considered a residential property. So you would get the same type of mortgage that you would get for a single family home. You can even use an FHA mortgage or a VA mortgage if you're a veteran like myself. And we can use those type of mortgages to acquire a single family home, of course, a duplex, a triplex, or a fourplex. Now, 5 units and above, there's no mortgage programs for, simple residential mortgages. You would have to go to a bank and get a commercial loan. So it's a different animal. Going from 5 units and above, it's like buying a 100-unit apartment complex. It's the same type of loan program. But 4 units and below, it's a traditional mortgage, residential mortgage. So if you have access to be able to buy a multifamily property with a residential mortgage, wouldn't that be a great strategy? Well, I think it is. And some of the books on my shelf here, I'm here videotaping here in front of my bookshelf because a lot of these relate to real estate strategies and real estate investing, and this topic is addressed in some of those books. One in particular here called Equity Happens. There's a whole story about one guy who bought a duplex and created a small real estate empire, starting off with a duplex. But I digress. If you can buy a property, it's a lot more affordable because you live in one of the units of your small multifamily property and you're collecting rent from the other tenants in the other units. Then you're sharing the household expense with your tenants. And that not only makes home affordability or real estate affordability a lot more accessible, it becomes even profitable. So I want to talk about some of the things that have recently changed and what the small idiosyncrasies about financing are. So let me go into that here in a second. Many people use mortgages like an FHA mortgage to buy a home, right? And that's one of the best ways to have the lowest down payment entry into home ownership. So with an FHA mortgage, you can use as low as a 3.5% down payment. In other words, the FHA mortgage will finance 96.5% of the home price. With a conventional loan, which is sold off to Fannie Mae and Freddie Mac. I don't know if you've heard those acronyms. It's not important here, but most people go with as low as a 5% down payment to 10% down payment. That's the most common down payments. There's pros and cons in whether you finance with an FHA mortgage or a conventional mortgage. There's pluses and minuses to each one. But with all of those, you're able to buy up to 4 units. Now, with FHA, as long as you can only have one outstanding FHA mortgage at a time. So same thing with the VA mortgage. And I'm a veteran, so the VA is for Veterans Administration. So some of this also applies to you veterans. And if you're a veteran, call me because there's some other strategies that I can help you with. But you can buy your first home with an FHA mortgage, and let's say it's a duplex. One of my children bought their first duplex with an FHA mortgage, my daughter. And one of my sons, who's a Navy veteran as well, he bought his first duplex with a VA mortgage with 0% down payment. Isn't that amazing? When you use FHA, you can't use FHA to buy a triplex or a fourplex with only 3.5% down. It's a higher percentage of down payment required. So for a 3-unit, a triplex, you need to put down 15%. You would have had to, because that's the recent change. And a fourplex, you would have had to put 25% down payment. With conventional mortgages also, let's say like my daughter has an FHA mortgage on their first duplex, and then they bought another duplex, a second duplex, without selling the first, which is awesome. So they couldn't use their FHA mortgage to buy the second duplex. They had to use a conventional loan, and they had to use a 15% down payment in order to acquire their second one. The recent change out of Freddie and Fannie and Freddie Mac is that now for FHA, you can finance with 3.5% down payment for a duplex, triplex, or a fourplex. That's new. And for conventional loans, you can go down to a 5% also. So if let's say you have an FHA mortgage to buy your first one, and then you want to buy a second one, you can use a conventional loan and be able to finance with as low as 5% down instead of 15 or 25% down if you wanted to go to a triplex or a fourplex. So that's the recent change. I'm excited about it because it makes the acquisition of these type of properties a lot more accessible and affordable. And aside from that, I was even recommending these strategies before this recent change because in principle, this is what young people are able to do. If they're struggling to be able to acquire a single family home where they have to carry the full burden of expensing the mortgage or the taxes, insurance, and all the other household expenses, and they have to shoulder that burden all on their own, then if they were able to acquire property and start earning income from the second, third, or fourth unit that they're not living in, then they're sharing the expense as well. And it makes the total household income or expense that they have to carry a lot less. It makes the house more affordable. And now these recent changes, it makes a down payment requirement a lot more accessible. So now home ownership, even in an expensive market like South Florida, is a lot more attainable. Lower down payment, sharing the expense with other tenants, and talk about a legacy for your retirement and for their future and their financial foundation. So one of the things that I've recommended to young people, my kids included, is before you go out and you buy your first house and make it a cute single family home, when you're young, maybe you either don't have children yet or your children are very young. Believe me, I have a lot of children. I know what it's like to have young children. They don't even remember where they used to live when they were little kids. So if you had them living in a small multifamily property that you owned, they're not going to hardly remember that they didn't have a regular single family home. So if you can buy a duplex, triplex, or fourplex, and then save up enough money to buy a second, third, fourth, fifth small multifamily property without having to sell the prior ones, you're building a real estate portfolio of rental income that is going to create a foundation for wealth for your future, for your retirement. Imagine having all of those paid off by the time you retire because your tenants help pay off the mortgages on those properties over the years. And now you have rental income coming in your retirement. I mean, what a way to have a sound, solid foundation. This is the strategy that I recommend to my children. I recommend to almost every young couple that comes to look at buying their first home, whether I met them through my own means or because they were referred to me by some of my peers and past clients, which are many, and I appreciate that very, very much. This is a cool strategy. Most people never think about it, and most people don't know how to implement. I know how to implement it, and I would love to help you guys, anybody that you care about who needs to buy a new home, and see if this strategy is a good fit for you. Well, this is what I have for you today. I hope you enjoyed this information, this strategy, and give me a call if you guys know how to reach me. If you have any questions about this strategy or any other real estate needs, give me a shout and we'll be happy to help you. Thank you for watching. Bye-bye.